Hello everyone and welcome back to the channel. We are almost at the end of the third quarter earnings season, and today I will look at the earnings report of the companies that I personally hold in my stocks portfolio. I'm going to skip Google, Meta, and Amazon today as those companies reported their earnings in October and you probably already know about the results. Instead, I'm going to breaking down the Q3 2025 results for Lumine Group, Topicus, Constellation Software, Intact Financial, Ferrari, and Novo Nordisk. We've got a fantastic mix of software, insurance, luxury, and pharma stocks. I usually try to write a summary of the earnings results and my thought about the earnings of these companies right after their earnings report on my Patreon and also Discord channel. So if you like to see my immediate thoughts and discussions around these stocks, see what I'm buying and selling in my brand new Patreon portfolio, and also have access to your IQ suite of software, make sure to click on the link below to join my Patreon. I think you will love it. And if you didn't like it, you can cancel your membership anytime you want. Okay, now let's dive into the core numbers. Let's start the video with Intact Financial. Intact is Canada's largest property and casualty insurance provider with an excellent track record in profitable policy underwriting and capital allocation. The main advantage of Intact compared to other insurance companies is the vertical integration of claim process. Basically, they do most of the things related to the claim at Intact itself, from risk management, profile optimization, consultation, legal procedures, physical repairs, and even home restoration services. And that's why they have higher margins and return on equity compared to other insurance companies in North America. Q3 was a phenomenal quarter for Intact. The business is firing on all cylinders. Let's look at the numbers together. This is the summary I wrote for the Intact's earnings on my Patreon page. Operating direct premium written growth was up 6% year over year. Combined ratio is now up to 89.8%. Remember that combined ratio less than 100% means profitability in policy underwriting. Most of the insurance businesses have a combined ratio close to 98%, so 89.8% is an amazing figure which shows significant profitability in Intact underwriting. Net operating income per share was up to $4.46. Operating return on equity was up to 19.6%. Again, absolutely amazing number here. Book value per share was up 14% year over year to now $103. Wow, Intact is growing its book value at 14% year over year, which is amazing. This is the immediate analysis I had on the numbers. Intact Financial Corporation reported very strong results, particularly accelerated premium growth, excellent underwriting performance, and a strengthening balance sheet. The CEO highlighted the company's momentum and its ability to deliver a high operating return on equity. Absolutely amazing numbers. I'm shocked the stock is up only 4% after these stellar numbers. I think Intact will continue to go up in price in the coming month, and it should be trading at a new all-time high in the next year if they can continue to deliver results like this one. Next, let's look at Constellation Software family. Let's start with the big boy, Constellation Software. So Constellation Software delivered exactly what I expected from them. Solid double-digit revenue growth and strong margins and cash flow growth. Let's look at what I wrote for Constellation Software earnings on my Patreon page. Revenue up 16% year over year with 5% organic growth, which is great. Net income up 28% year over year. Operating cash flow up 33% year over year, and free cash flow up 46% year over year. Constellation Software experienced double-digit growth in revenue, net income, and cash flows for Q3 2025 due to successful integration of acquired businesses. All figures are showing significant growth across the board. The AI concerns obviously didn't affect Constellation at all in previous quarter, at least not yet. Additionally, with Mark Miller at the helm, CSU is going to maintain its existing strategy. I believe none of the concerns, the AI impact on the business, and also change of the leadership has really materialized in anything related to the numbers in the earnings of the company. And for that reason, I will continue to buy and accumulate more shares of Constellation, Topicus, and Lumine. Despite the significant downturn we see in their stock price, I will continue to do that. This is the obvious example of you should be greedy when others are fearful. The stock initially after market open on Monday went up 5%, but immediately it followed by a massive sell-off due to some downgrades by some analysts. Despite the amazing numbers reported in the earnings, Constellation continues to go lower in price, and I believe it is now trading at extremely cheap valuations compared to the strong underlying business and fundamentals of the company. Okay, next let's look at Lumine earnings. Lumine showed impressive operational leverage with net income and cash flow gains significantly outpacing the revenue. This is what I wrote on my Patreon for Lumine. For this quarter, revenue was up 5% year over year with 1% organic growth. Operating income up 7% year over year. Net income up 36% year over year. Operating cash flow up 143% and free cash flow up 297% year over year. For year-to-date results, revenue up 14% with 1% organic growth. Operating income up 32%. Net income is positive compared to negative last year. Operating cash flow up 167%. Free cash flow up 272%. Total liabilities for the company down from 608 million to 516 million. And cash on balance sheet is up from 210 million to 232 million. From their spin-off date, free cash flow grew by more than 40% a year, which is impressive. They still try to consolidate their balance sheet and normalize their convertibles after the spin-off. The only negative here is the 5% revenue growth, which is mainly because of lack of acquisitions in the last couple of months. They are ready for a couple of big acquisitions to fuel faster growth in future with that large cash position and lower debt. It's not the best earning results in the world, but I am happy with the results. That's what I wrote for Lumine Group after the earnings report. Of course, the market thought that this was a terrible earnings report because Lumine share price is actually obliterated after these earnings. But in my opinion, it wasn't that bad. Next, let's look at Topicus.com. Topicus headline net loss is scary on the surface, but it was an accounting hit. It wasn't an operational one. This is what I wrote on my Patreon for Topicus earnings. Revenue up 24% year over year. Organic growth comes at 3%. Operating cash flow up 53% year over year. Free cash flow up 114%. And they just completed 3 acquisitions in October. Staffing costs are a bit higher than what I expected, 25% higher this quarter, but I think that comes with more frequent acquisitions, and AI can help them in this regard. Overall, I think the report was decent. The only minor negative is the organic growth, which is a bit weaker than expectations, but still much better than Lumine. Now, let's switch gears to luxury products and discuss Ferrari earnings results. Ferrari numbers are often more about pricing power and branding power than just volume. I would say it was another flawless quarter where Ferrari demonstrated pricing power, revenues and profits grew despite flat unit volume, which is exactly what we want from a luxury brand. This is what I wrote on my Patreon for Ferrari. Revenue up 7.4% year over year, while shipments are only up 18 units. Operating profit up 7.6% year over year with EBIT margin of 28%. EBITDA up 5% year over year with EBITDA margin of 38.8%. This is an amazing margin for Ferrari. Diluted EPS was also up 3% year over year. Share buyback program will continue with approximately 2 billion euros. Guidance was also adjusted to a bit higher. Overall, the results are in line with expectations. Ferrari continued to grow at a steady pace and the company is in a good shape. I'm not going to buy new shares of Ferrari here, but will hold all of my shares. If the stock price drops below $370 again, I will buy more shares. Finally, let's talk about Novo Nordisk. The company trimmed the upper end of its 2025 sales and profit outlook. This miss was attributed to slowing momentum for the GLP-1 franchise due to illegal compounded versions in the US and increased competition from rivals like Eli Lilly. They also cited higher research and development costs. The growth is still very strong in the obesity segment, but the slight miss and the cut to the full-year outlook is a negative signal. The GLP-1 market is massive, but the competition is heating up and we need to watch the margins and the impact of the compounded alternatives closely in the next couple of quarters. Okay, this is what I wrote on my Patreon. Sales up 15% year over year, operating profit up 10% year over year, and diluted EPS up 4% year over year. Guidance is a bit lower than before with 8 to 11% sales growth. They missed expectations a bit and overall the report was not great. But it wasn't bad either. They mentioned before that the sales are going to slow down, so this wasn't a surprise. They continue to pursue Metsera acquisitions and compete with Pfizer over the company. I should note that yesterday Novo Nordisk is officially walked away from the deal and the stock went up 7% after the news. Overall, I will hold Novo Nordisk for another 2-3 quarters and monitor the developments of the company. They just had a management team change and the new CEO needs some time to execute the new plans. They are aggressively buying more companies and investing for growth, which is good. And I think Novo Nordisk will do great in 5 years. I'm feeling good about these results and the path forward for all 6 companies of mine. What do you think about the earnings results of these stocks? That's it for this episode. Thanks for watching and I hope to see you guys in the next video. Farewell.